finger on. Hello. Excuse me, we're recording.
Reality radio for a really great future. We're talking real money.
Welcome to the podcast again. Hi, everybody. It's Talking Real Money is the name of it. I'm Don McDonald, one of your two hosts. The other one, that's that guy over there, Tom Cock. And we're here to try to help you manage your money better. And one of the ways you manage your money is by sometimes hiring someone to help you do it because, well, given the state of the industry, it can be pretty confusing. But we use that big word a lot, fiduciary, because we believe that you should never get advice from anyone who does not have a legal requirement to, here's the key word, always act as your fiduciary, in other words, in your best interests at all times, and to disclose in advance any possible conflict of interest clearly and concisely. Conflicts of interest, by the way, can include fees. They don't get disclosed concisely a lot, do they? Anyway, I happened to bump into an article when I was reading through my news feed from the folks at Smart Asset, which is a company that helps match you with financial advisors, and we've used their service and
a long time ago, by the way.
I found some of the matching to be a little sketchy, but hey, what
well,
the
no,
heck?
okay, but just to be very honest, it was a fascinating process because we looked into this. You looked into this.
Yeah, we
decided to use them, and so what they do is people respond to things like we're going to discuss the article,
right?
And then their prospects. Then they send those prospects to 3 firms.
3 different advisory firms.
I know. So what we learned was if you're not Johnny on the spot on the phone right then with people, you're not going to.
The other thing is I've done it myself. I've actually sent in the things, and I get back advisors locally who are not always required to act as fiduciaries.
They're not.
I look them
and
up.
They're good salespeople, way better than we are.
We are going to show you how to look them up and vet them in this episode.
Good.
This is the best, most important episode we've ever done.
Really?
It's the best. Yeah, because we're going to help you actually do something.
I better get my A game going
instead of just rambling. Anyway, so they go through about how important it is to find a fiduciary financial advisor. They quote a Northwestern Mutual study, ironically enough, from a non-fiduciary, saying that adults who work with a financial advisor report, quote, substantially greater financial security, confidence, and clarity.
Well, no, they also say Americans who enlist fiduciary advisors report higher investment gains and benefits from increased assurance.
That was a Vanguard study.
Okay. That's the 3%.
Yeah. The
advisor beta. Yeah.
Right.
Okay.
Advisor alpha.
Pardon me, beta. Yeah, sorry, alpha, beta. Anyway, so
he's testing this out, so it's his beta.
Thank you, exactly. So
they say, well, they go.
Fair enough.
Are you going to let me say these things?
No, I'm not. Apparently so. Yeah, you said it's our best ever.
How to find a fiduciary advisor. All right. So here are some of their ways to find them. I love this stuff. First, simply ask. Most advisors will respond candidly if they are fiduciaries or not.
Now, let's talk about that one. First of all,
I find
if you go to any advisor today, they will say it. They will say it.
100% of the time.
Yep. Because
even insurance agents will say it.
We just had a case where a gentleman called me and said, you guys talk about fiduciaries. You talk about it. You don't spell it, but you talk about it a lot. And I have an advisor, air quotes, with a major insurance company who says he's a fiduciary. And I said, no, he's not. Yes, he is. No, he's not.
See, now you're not arguing this properly.
Okay. You're better arguer than I am.
He
debater.
is a fiduciary at times.
That's the thing.
Okay,
Yeah.
You have to qualify it by saying, yes, that person can conceivably act as a fiduciary sometimes. So they can be part-time good for you and part-time bad for you.
Yeah, but this
which
is the
part
point.
are you getting? Do you know?
Exactly. No, you don't know. Because this is a silly thing to say, that you can ask people and that they're going to be candid with you. No, they're not.
We know in the Seattle area on the radio, in the Orlando area on the radio, we know that there are several people who actually claim, in fact, one of them is a CFP, which we're going to get to in a minute, who actually claim to be fiduciaries, but we know that they pitch indexed annuities to the people they're selling to. We know that for a fact, And they should not be allowed to call themselves a fiduciary, at least not imply all the time.
Well, no. And if you're selling a product with a commission, that is a conflict of interest. And so you should not be allowed to call yourself a fiduciary.
No, because in that situation, let's use that situation for a minute. You have two mutual funds. Let's use the S&P 500. You have two S&P 500 funds. They are absolutely identical. There is a fund from Vanguard that charges, what's the fee on the Vanguard?
I think it's
VOO?
3 basis.
I think it's 3
points.
100ths of 1%.
Yep.
And I once found an S&P 500 fund that was like 3/4 of 1%. So
0.75 versus
0.75.
0.03. Yes.
Right. Now, the advisor is going to get a kickback on the 0.75 of at least 1/4 of a percentage point every year, and nothing from Vanguard. Now, which fund is a fiduciary required to suggest is the best for you?
That would be VOO.
That's right.
Yep.
Not the higher cost one.
Yep.
If they try to sell you the higher cost one, they are violating their fiduciary responsibility, which is why they are dually registered. So in one case, if they're acting as a registered financial advisor, they have to tell you about the cheap one. But if they're acting as a registered representative or a broker, then they can sell you the more expensive one. This is a terrible, terrible, terrible system.
Yeah, but let's go back to the first thing they're saying again. Verbally means nothing. Get everything in writing, period.
Yep.
Absolutely, 110%.
Get it in writing. And most of them won't put in writing that they are always
they
going
have
to
an
act as your
excuse,
fiduciary.
too. I love it.
Our compliance department will not allow that.
Sure.
You know why their compliance department won't allow it? Because their compliance department will not allow them to lie.
They don't want to end up in jail. So that's why.
Anyway, so the second thing you can do, how to find a fiduciary advisor.
Yes.
You could verify that the financial advisor is certified or registered with certain groups or governing bodies. Any advisor registered with the SEC or state regulators is legally required to abide by fiduciary standard. Wrong.
Yeah, that's completely wrong. I can't believe they said this in here because, yes, you could be registered as a investment advisor representative, IAR, as part of a RIA, registered investment advisory, but you can also be registered as, guess what? A broker dealer. But walk us through how people can go and find this out on their own rather than, and by the way, people call us all the time and say, is this guy a full-time fiduciary? No.
I'll look him up.
Yeah. We do this on a regular
I'll
basis
look him up.
for people.
I'll look him up. Wait a minute. I was going to look up one of the radio show firms, but I can't remember their names now.
I don't either. Don't ask me.
I'm just going to do Ameriprise.
Lucky enough just to find the address here to show up today. So
they're a big one. Ameriprise. We're going to look them up. Let's say you got an Ameriprise broker telling you that they are a fiduciary. We're going to always act in your best interest. Well, here's what you do. This is the simplest way to do it. You could go to this other website, but people don't know how to spell it. So we all know how to spell BrokerCheck. One word. BrokerCheck.com. Just go to that.
Yep.
This is a site run by FINRA. Type in, there's two buttons. Individual, you can type in the person's name, or you can type in their firm. Let's type in the firm and hit search. Right there we see Ameriprise comes up 3 times. American Express Financial Corp, which is what they used to be. Only one of those is still registered. And you will see in the little box, it says Ameriprise Financial Services, brokerage firm regulated by FINRA, and IA, investment advisor firm. Now, they're regulated by the SEC. In only one of those cases is there a requirement that the person always act in your best interest.
Thank you.
Now, they also have another little thing that's very interesting, and with a firm the size of Ameriprise, it's always going to have this. There's a thing called disclosures. This is times when the firm has gotten in trouble. If it says yes, that means they've gotten in trouble. Well, Ameriprise, of course, given their size and other things that I'm not going to mention, has a lot of disclosures. I mean, a lot. Look up Thomas C. Cock, you'll see no disclosures because he's not done anything illegal or been accused of.
As yet.
Tom, stop that.
Sorry. It was too easy. All right. Kidding.
All right. So then I click on more details.
Yes.
All right. Then there's a button that says visit, because you see brokerage firm, and then investment advisory firm again. Click Visit SEC Site. Then you click Go to SEC Site. And there we have, it says View Latest Form ADV, Part 2 brochures, and Part 3 Relationship Summary.
Which the new one should be out now, I think.
The Part 3 Relationship Summary is the most ridiculous, stupid thing that the industry said the SEC could do, and they helped them write it, and it's worthless. But their Part 2 brochures are actually very, very powerful. And the more Part 2 brochures you see, generally the bigger the firm. But what we're going to do is just pick one of these plans out. They have two that are likely to apply. One is called Ameriprise Managed Accounts, and the other is Ameriprise Financial Planning Services. I'm going to use Managed Accounts because that's more likely to be the one you're sold. And up will come a PDF document usually. Now, one of the things that's a giveaway that you're probably not dealing with a 100% fiduciary firm is the length of the Form ADV. Now, this Form ADV, looking at the table of contents, is 103 pages long.
Yeah, light reading for the weekend.
It's really, really long. and most of them, fees and expenses, are like page 3, maybe page 4. How they get paid is on page 66, which is just incredible. So what you want to do in this document is you want to search for a couple things. First, you want to search for fees. Just use your search. Go through the fees and compensation. Okay, here, fees and compensation, 46 to 55 in this case. And then you'll notice they use a lot of garbage and gobbledygook and paragraphs of stuff you're never, ever going to read. So I'm going through page after page after page of this, looking for a number. Now, I am having a hard time finding the number.
It's somewhere on those 10
somewhere
pages. By the way,
here.
It's a red flag when they have that many pages on fees.
Right, because if we go to, hold on, let's go to Appella. Appella Wealth. Okay, very fair. Let's pull up their ADV. I've got it right here. ADV Part 2.
Do we have the new one up yet? Might not be. Still too early.
I don't know. I don't think it really matters. I'm just going to pull it up.
It's going to be very similar to last year.
The Appella Part 2 brochure. Yeah, March of 2024. No, it's not up yet.
I was going to say, yeah.
I think you have till the end of the month. But,
I think you're right.
So we're going to go to fees and compensation. And by the way, this 44-page ADV. Fees and compensation are on page 13.
How many pages?
Appella's a pretty big company. 44 pages.
We have 44 pages on fees?
No, 44 pages total in the ADV.
Okay. I was like, okay.
Okay, when we go to Appella, they actually have a chart. This is what a good firm is going to have. Here it is. If you have $0 to $1 million, your set fee is 1% per year. Above $1 million, everything above $1 million, 0.5.
Yeah. It's pretty straightforward.
Is that pretty simple?
Yeah.
Now, let's do Appella's and let's find conflict of interest. That's the other thing I want to do.
I was waiting for that because that to me is one of the keys here to finding out if you have a 100% fiduciary. Because if you have conflicts, then most likely you don't.
Yeah, and here's the conflicts. I love this. Here's one of the conflicts is that there is the potential that Appella and its investment advisors have a problem in that they can earn advisory fees when they recommend that you roll over your 401k to an IRA.
Yeah.
We're disclosing even that. Well, of course
we'd
get a fee.
Yeah. No, not a fee from the rollover itself, but a fee after we manage the money. Yes.
Yes. So we're promising to always tell you, and we're giving, actually, Appella gives a written acknowledgement of its fiduciary status in its Form ADV. Good luck finding that in most big brokerage firms.
But let's get to the conflicts because this is really where the rubber meets the road for me.
Well, that's the only conflict in Appella's.
No, I know. I thought you were talking about Ameriprise, for example.
Ameriprise.
Yeah.
Oh, let's do that one.
Those are probably legion, at least.
Hold on. Let's do it. We're doing this real time, folks.
Yeah, this is coming up right on the screens as we speak.
Conflict of interest. Let's see. Oh, there's so many of them. Our determination of which share class to offer as the only share class represents a potential conflict of interest
You bet
due
it
to
does.
financial incentive to place you in higher cost share classes that pay us more.
You just mentioned how that happens. Yes.
Anyway, so the conflicts will include things like insurance. If we sell you insurance, we have a conflict of interest because we get a commission. If we sell you securities, we have a conflict of interest because we get a commission. Those are conflicts, which means at that point, unless you're told before you make a transaction with the advisor, they're not acting as a fiduciary.
Yeah, you raise a very good point here that, again, anyone needs to check on these things before you hire somebody, because this came up recently with a woman we were talking to whose money is in a major brokerage. And she said, well, how do I know? How do I know whether they're 100% fiduciary? And if you go to BrokerCheck, you research them, and yeah, it takes a little more time, but remember, this is your money. You need to know, is there a possible conflict? And Don thankfully just pointed out not a few conflicts, a lot of conflicts. So really, in my mind, why would you have anything other than work with anybody that has that conflict, that potential for doing something that could be harmful to you, whether it's just the fund or whether they put you in an insurance product, an annuity product, or something else that is not in your best interest. Absolutely critical.
And it is a pain to look these things up. It truly is a pain.
It takes time. Yeah.
But the reality is you've got to do it. If you don't do it, then you have no one to blame but yourself. Oh, I found one. I found the broker or the online guy I was looking up. Hold on. I want to look him up. His first name is Brian. I'm not going to give you the rest of it.
This is somebody you know?
No, this is somebody on the radio in Seattle.
Ah, okay. All right. Yeah, I know who you're talking about now. Yeah,
you know who I'm talking about.
Yes, I do.
And his conflict of interest is the fact that he sells insurance. They claim, by the way, I think this guy is a CFP.
I believe he is.
But the problem is they sell insurance, and that is in their ADV. I just have to pull up their ADV. Hold on. All right, here we go. Conflict insurance. When this firm recommends an insurance product and then implements the recommendation, the firm and its representative receive additional compensation in the form of insurance commissions earned. While commissions are customary, they can be substantial. Receipt of commissions presents a conflict of interest in that both the representative and the firm have a financial incentive to recommend the product to also earn a commission. All right, so here's the deal. I am confident. I've never been to one of their lunches or dinners, this firm, but I've been to others, and at every one I've ever gone to, I have asked this question. How much do you get paid when I buy one of your indexed annuities? And that's, by the way, I know this firm, that's the product they're selling. How much do you get paid? Well, you don't pay us. What do you mean? Who pays you? The insurance company pays us. Well, how much do you make? Well, it's not coming out of your pocket. At least and I'm pretty confident they're not going to tell you this in a meeting. They might just be incredibly honest. I don't know, but probably not. In fact, most firms don't even like giving you the ADV. They're supposed to, but because down here, lower in their ADV conflict area, it says insurance commissions are generally structured as a one-time payment, typically up to 7% of the face amount.
So think that through a little bit. If you give them $200,000 to put into one of their equity index annuities,
$14,000.
200. Yeah. I mean, that's a pretty good afternoon work. You can see why they'd be a bit embarrassed about the amount of money they're getting paid for this.
And how you are going to be hurt by it.
Yeah. Reducing your principal.
So you got to read this stuff. Yeah, it's just too important.
But there's a third one in this article.
I know. And by the way, this applies to Brian because Brian is a certified financial planner and yet doesn't always act as a fiduciary. However, this Smart Asset article says third, advisors who hold certified financial planner or chartered financial analyst certifications are held to an ethical code that imposes a fiduciary relationship between the certificate holder and their clients. I wrote a letter to the CFP board.
Yeah, I remember.
Telling them about people I know of who have CFPs and sell insurance products and still hold themselves out to be fiduciaries. They haven't done anything about it. You know why? They want the money that they're paying for their CFP designation.
Yeah. And that is a huge conflict. It goes back to this whole word anyway. Now, remember, if you go back 25 years, there were very few people using the fiduciary word. A few, not a lot. Then what happened was the people that weren't using it, you can see the major brokerages in this industry as well growing this, found out, wait, people really like that. They really like the idea that they're going to hire somebody who's going to always act in their best interest. So it became this, I hate to say it, marketing term. It really is today a marketing term. This is a word that people, oh yeah, fiduciary. Oh, you bet, fiduciary. When in fact, you can only hire somebody who's a 100% fiduciary, as you point out, Don, because the conflict still exists for people that say, I'm a fiduciary.
And then further down the article, they mentioned that also there's NAPFA, the National Association of Professional Financial Advisors, that are supposed to be fee only. But, you really need to check because I don't know that that's absolutely always the case, because how do they make that decision? Do they actually go through and read the ADV line for line? I truly doubt it, because I see so many of these sneaking through the cracks. And you've got to take care of yourself. There's just nothing else to do.
100% agreement. All right, a couple questions real quick from Cincinnati, New York. Larry writes, regarding fund management, I learned 30 years ago to tune out the noise from the media, both the positive spinners and the doom and gloomers. But now I'm a couple of years away from retirement. I've amassed well over $1 million in a broadly diversified portfolio. I find myself hearing the doom and gloom. I'm not going to react in any way. I'll keep my balanced portfolio, likely moving into Vanguard's balanced index fund when I roll over my 401k. Here's my question. If the worst were to happen and the dollar collapsed, inflation soared, etc., will my investment in the fund collapse, or does fund management at some point look at the reality on the ground and adjust in whatever way may be necessary or possible? In other words, the Vanguard Balanced Index Fund, is there someone there saying, ooh, those are rocky shoals ahead, we're going to shift from here to somewhere else?
No, nor will there ever be, nor should there be, by the way, because you're making the mistaken and all too human assumption that we can look forward and go, well, it's obviously not going to be good from here. No. That's predicting the future, which is inherently unpredictable. And by the way, the evidence points that out. There is no evidence to support the contention that we can get out and then, the other trick, get back in.
The only protections I know would be globally diversified, right? Make sure you have the right mix of stocks and bonds for whatever your plan says, what you're trying to make on the money, how much risk you're willing to take. Keep your costs low. That's it. And I think that's worked well in the past, and we hope into the future.
But I want to make it really, really clear, because this is a mistaken belief that many of us share. In fact, somebody very near and dear to me keeps telling me it's time to get out. It's time to get out. Everybody knows it's bad. If everybody knows it's bad, why are prices where they are? Everybody knows it. Shouldn't prices already be reflecting the fact that everybody knows it?
Prices reflect all the current information. All
the current and expected information.
What people
It's only when we get surprised. But the problem is the surprise cannot be anticipated, because by its very nature, a surprise is something you don't know it's coming.
All right, let's squeeze one more in here from Pankaj in beautiful Bellevue, Washington. Hear your show regularly. Thoroughly enjoy hearing about the vast array of topics you cover and your amazing sense of humor. Pretty sure he was talking about me there. I wanted to jumpstart investing for my kids, 18 and 23, by investing $5,000 for each of them in their Schwab accounts and encouraging them to investing a portion of their earnings, mostly internship money now, in mutual funds. What ETFs would you recommend that we start off with?
AVGE, DFAW.
Pretty easy. And by the way, I would also suggest considering the purpose of this money. If this is something they may use for a house, then yeah, just a brokerage account. If you're really trying to encourage them to start saving for retirement, then I'd want that in a Roth IRA. Now, I have to have earnings for that.
A Roth.
Yeah. Love me some Roth, especially for young people. God, think of 40 years of tax-free growth. Wow.
40.
That is huge.
Try 50 or even
I know. I'm just
60.
up to retirement. Yeah. Maybe it could be longer than that.
Because it's going to go longer than that. So we're talking the potential for massive amounts of tax-free growth.
Yeah, it's wonderful. All right, a couple things to mention here. If you want more education, we do all kinds of, not the two of us, because we just do this, but others among our organization do things on taxes, estate planning, Social Security planning. You can go to AppellaWealth.com, click on events. There's all kinds of free webinars there. Number two, if you want more personalized help, that's right. Our advisors are here to provide that. We give you time free. We analyze your portfolio free. You can go to talkingrealmoney.com, click on Meet an Advisor. And as part of that, I will be in the Southwest on Monday, April 14th, taking a few meetings while I'm there. If you'd like to meet with me while I'm in Phoenix, go again, talkingrealmoney.com, click on Meet an Advisor. First come, first serve. Making the meetings right now for that Monday, the 14th. So take advantage of all this stuff because we want you to be a better investor and worry about all of this less. We've heard a lot of worries lately. I know that. So we're trying to get you to calm down, invest for the long haul. Exactly. Doesn't help anything.
Everything, it's built. Expectations are already built in. They're
Indeed.
already built in. A surprise? Yeah, that could cause the market to tumble. Markets just tumble sometimes anyway, just for the heck of it. That's part of the normal process because they can't go up forever. Otherwise, they wouldn't have any risk. And without risk, there is no reward. By the way, a correction. I don't know what my little brain freeze was on NAPFA. It's the National Association of Personal Financial Advisors.
Not
personal
professional.
Financial Advisors.
Yeah,
not
thank you.
professional. It's personal. It's
Let's not
personal.
make it
It's all
personal.
personal.
Don't take it personal. That's one of the 4 basic agreements. So don't.
All right. Remember, almost every day and live on Saturdays on the radio, we're talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.